Pradip Shah, Chairman at IndiaAsia Fund Advisors, joins us right now on the show. Mr. Shah, good morning, and thank you so much for taking the time out. What does the texture of this market tell you currently, Mr. Shah? Because as has been the norm now for the last few weeks, the Sensex is perched at all-time highs, and there is select value that is emerging. The good companies are being bought into at lower levels, but the weaker hands continue to remain weak and continue to see selling.
Well, it's not just the weaker companies that are selling. It's, I think, a lazy investor decision to invest in the larger, well-known, of course, well-performing companies. And so you see the index has been driven up by basically a small group of stocks. Roughly 10 stocks are driving up the index. What is good about the economy is that there is growth. There is a demand growth that has come back after 2 years of despondency because of demonetization, because of GST, but all the changes made by government, including the e-way bill and so on, and of course the monsoons, last 2 years, monsoons being good. We are seeing now a demand very good across sectors, wonderful. However, there is still that fear of the macro factors, oil at such a high price, current account deficit at a record high in the last several years. We've not seen this kind of $16.6 billion current account deficit for a quarter. And of course, US interest rates rising, the trade war, and most importantly for us, the sanctions on Iran, which, as you know, was a big supplier of relatively better priced oil for us. Now, all that, and plus the election uncertainty, that next year we will have elections, or at least within the next year we will have elections, state and center perhaps, and certainly states and central, all 13 together, or just the center and some states. But all that causes some uncertainty which the market cannot reconcile, cannot resolve. And so I think the market will tend to drift downwards. At every high there will be sellers emerging, and the buys will come when the bargains are so good. And especially in the B category, where somebody has to do research, somebody has to spend time to understand the company and better, it is obviously they are drifting down. There is a seller, there's no buyer on the other side.
No, but Mr. Shah, do you don't believe that in certain B category stocks the bargains are that good? You believe there should be some more price/time correction?
No, I think the bargains are visible in terms of absolute value. There is clear value there. Companies which are cash rich, going at 5 and 6 multiples of earnings. Of course, they are commodities, so when the commodity cycle is down, their earnings will be down, but you can't go wrong with something like this. But on the other hand, because of the uncertainty, especially the election uncertainty for India, that is causing this concern that people want to hold back money. They think that there will be a better price available tomorrow or in the next few months. At some stage, it will be apparent that whoever comes to power, if, for instance, Prime Minister Modi does not come back to power, which is, I think, unlikely, but suppose that happens, the normal growth of 6-7%, as our chief economic advisor, Mr. Subramanian, said, that would be a kind of normal, would anyway continue. And if that continues, the leading companies in the industries will do better than that, 50% better, 100% better in terms of profit growth, in terms of revenue growth. And so we will see those companies being snapped up by value-conscious investors, the discerning investors, those who do work. This is not a market to invest in an index and forget. No, it's not possible just now. At some stage that may be possible when it seems that the whole market is bottomed out, and especially a broader index, not the narrow index of 30 stocks or 50 stocks.
Mr. Shah, I do want to talk about the narrow index of 50 stocks, because we really have seen that outperformance come through on account of, say, a couple of large IT companies, something like a couple of your large NBFCs which are leading the play, even something like Reliance Industries. But the gains coming in is only in a handful of these stocks, which has kept the indices and they're trading where they are at this point in time. My question really is, should one go in and put in fresh investments in some of these, especially considering valuations of some of these are extremely high?
Well, it is fund managers who have that compulsion to invest. They've been given money to invest, not to sit idle on cash. So for them, it is better to invest in the large cap scripts where there's prompt liquidity. If you want to sell out, you can sell out. And they are good companies. No one can fault them if you invest in an HDFC bank or that you did a wrong decision. So they ignore the price and they run the price up further. But for the value conscious investor, whether it's a fund manager or investing for one's own account, the bargains are not there. The value, the outperformance will be from the second tier stocks, where values have been beaten down in many cases because they are under researched, they are not followed. It takes effort to make that research. Some of them may be commodities, some of them may not be commodities, but certainly they've been beaten down. And if you notice, even in this market, the multinationals are getting stratospheric valuations, whether it's consumer products or even industrial products. And in the consumer products, even domestic companies are getting very high valuations. I'm talking in terms of price earnings multiples and so on. Whereas industrial companies of the homegrown sort are getting beaten down. Though demand is very good, the performance is likely to continue for the next year, 2 years. I think it's going to be quite good, and so you will get bargains in that. So the discerning guys will come in, and we had talked earlier once about the public sector banks. I think buying will emerge even in those public sector banks.
Interesting. There's no confidence motion tomorrow, Mr. Shah, while it may have brought the sentiment down temporarily, and it will not really result into anything else, but other than conversations between the two sides and some heated debates. Do you reckon that the next 6 months could well have extremely volatile bouts in the markets because of either of the sides, whether the ruling party or the opposition party, firing fresh salvos which might be larger in nature? I mean, we haven't seen or heard anything of a no confidence motion in a really long time now.
You're absolutely right. I think there will be volatility. It may not be because of salvos in Parliament. It will be outside Parliament. There will be allegations coming out. There will be scandals coming out because it is a run-up to elections. And then there will be pessimism that there's a lot of negativity on an incumbent government, whether it's in Rajasthan or Madhya Pradesh or even perhaps at the center, that there is going to be some loss of votes. And I think here is where the government, I think, will have to think of what positive steps they can take. The government is doing very well on the economic front in terms of the structural changes they've made and the structural changes they've identified. But perhaps the time now is not for big ticket changes, but for micro changes. So if Prime Minister Modi were to give a mission mode directive to every ministerial office and below them to the secretaries, that work next 3 months on how to ease doing business and how to ease living conditions for people in the country. That would be a wonderful, that would be a winning formula for Prime Minister. Everyone knows that he has great vision and everyone wants to support him. But there is an oppressive and tyrannical bureaucracy that has seen, that is happy to issue threats, to throw the ball in an individual's court, whether it's the Ministry of Corporate Affairs or whether it's the Ministry of Finance or the RBI. And those regulations are oppressive. They are tyrannical. People are not getting their rights. Their rights are getting snatched away if you don't perform in a certain way. How can a country behave like this? You can set up a company in Singapore in 24 hours. Try it in India.
Mr. Shah, two factors that may influence the course of the markets in this upcoming year, keeping the elections in mind. One is interest rates, the other one is crude. Your take on both and the impact it can have on the markets?
Well, the interest rates in the US will rise. I think the US economy is doing very well. The tax cuts helped in stimulating demand. And of course, there was momentum of growth in any case. So I think money has been flowing into the United States, but the Fed is shrinking the balance sheets, and the Fed wants to control inflation if it sees it moving up. So it is going to be, in an orderly manner, jacking up interest rates. And so is the QE, quantitative easing, is easing in Europe as well as in Japan. So globally, interest rates will rise. There is no question about it. That will have some effect on us. We will have to recognize that money can flow out, as it has been doing in the debt markets. What we need, if we build confidence in our economy, if we build confidence that the Prime Minister Modi's government will come back, will do well again, and as it has done in terms of structural changes and the drive towards improving growth, money will flow back into the country. Today we have seen a lot of outflows even on equity account, and that money coming back will help, plus domestic savings, which have suddenly got rattled by all these market corrections, and mutual funds to outperform were investing in the second tier companies, and those have seen a big correction, and the SIP money is slowing down. All that people feel misled a little bit, that they thought the equity markets were one-way street. A lot of that will go away as people realize that no, we've bottomed out, and now the stock market will not go worse. Yes, there will be uncertainties of election, there will be uncertainties of oil price, there will be current account deficit, all that will be there, but we can cope with that. We have coped in the past, we will cope with it now. But if the economy as a whole continues its momentum of 6-7% growth, perhaps even higher if this monsoon is good, we might see 8% growth, I think money will flow back, and from the domestic as well as the international markets.